morning, everyone, and welcome to the CBI at 10. As tempting as it is to share our collective wisdom on the football or just comment on the return of what you would call weather, this morning we've actually got quite a meaty subject to kick off the week, which is cash flow. Cash flow and debt, cash flow and tax, cash flow given what we hope is going to be quite a reopening of the economy, and clearly, though, it's going to affect different sectors and different businesses differently. And one of the things that we've been aware of at the CBI at 10 meetings is understanding the different pressures on different kinds of businesses and particularly different sizes of businesses. And one of the big focuses this morning is how that's affecting small and medium-sized enterprises. So that's going to be the core of our conversation. We're incredibly grateful to Dame Theresa Graham, who's joined us, who's the chair of UK Finance, the SME Advisory Group, Mark Gill from the HMRC. So Mark, it's really, great to have you here with us, and Louise Helen, who's the Director of Economic Policy at the CBI. So I'm going to come to you all in one moment, but I'm going to start with John Foster, if I might. John, good morning again. How are you?
Good morning, James. Very well. How are you?
Very, very, very well. Well, I think that given your job, given the way in which the CBI has to think about the communication to business, from business, and to government, it feels as though we're at a day, aren't we? We feel as though we're the moment where we're beginning to hear what the terms are going to be of reopening on July the 19th. What are you thinking about that and how that's best communicated?
Yeah. Well, I mean, listen, James, lots of messages, briefings, media stories coming out from government. It can be quite confusing for firms. So I'll just take a couple of minutes just to give our sort of hot take on where we are. I think the first thing I'd say is there's obviously been a real dialing up of optimism from the government. So it's almost unimaginable that 3 weeks ago we had quite a downbeat assessment, didn't we, about the impact of the Delta variant. And just thinking about what's changed. Well, obviously, we have a new health secretary. I think it's fair to say Sajid Javid gives greater weight to the economic impact of ongoing restrictions than his predecessor, Matt Hancock. And we've seen a real shift in messaging. So the government is now talking about how to learn to live with the virus. And I'll touch on that in a second. I think more importantly than the personnel is the pretty strong evidence that the vaccine is actually now breaking the link between transmission and hospitalisation. It was no accident that we saw Dr. Stephen Powis, the NHS Medical Director, out and about on Andrew Marr over the weekend. So I think a real cause for optimism, first and foremost. The second thing that we're thinking about is, well, how does this optimism translate itself into real action for firms? Now, what we can expect is for the government to give us clarity on the following three areas, James. So firstly, what are the social distancing measures that firms will have to deliver on beyond the 19th of July? And that's going to include things like the future of the 1 metre plus rule. Now, all the indications is that this is going to be removed, which is good news. Secondly, what is the status of COVID status certificates? Will they be rolled out? Now, again, our understanding is these won't be introduced now. They certainly won't be made mandatory, but there is a bit of an open possibility they could be used in some voluntary capacity in the winter. So we could come back to this one. And then the final piece of the jigsaw puzzle is, how is the COVID secure workplace guidance going to evolve? And what will the message be in terms of the working from home mandate? Is that going to remain in place? And on that last point, we fully expect the government message mandating people to work from home to stop. But what they're not going to do is almost flip it. They're not going to order or campaign for people to go back to the office. And then the big question is, well, when are we going to know all of this? Now, on the detail behind those three issues that I just spoke about, we're going to know a little bit later today. Prime Minister is due to give a press conference later this afternoon. Now, what he's going to do is hold off from giving formal confirmation of the move to step 4 until Monday, the 12th of July. That's to ensure the government has all the latest data available. But what he's effectively doing is giving firms an extra week, 2 weeks in total, to prep for that move to step 4, and that's positive. I'll just finish, James, with the messages that we've been delivering into government. I think first and foremost, great news that the data looks positive for the move to step 4. Every day that the economy remains closed is another day that risks jobs and businesses. We've spoken previously about a week not being enough time for firms to plan, so hugely positive that the government has now listened here and is giving a little bit more time, albeit just an extra week. Secondly, learning to live with the virus is exactly the right ambition, as is the move from mandated requirement to greater flexibility and more personal responsibility. But, and I think this is really important, whenever business moves from a black and white scenario to something that is more grey in its understanding, that worries business. It sort of creates questions. So we think the government needs to provide real clarity to then inject confidence. And there were sort of 5 areas that we've been thinking about this morning, James. So firstly, the implications, legal and otherwise, for workplaces on the removal of that 1 metre plus rule. Secondly, the long-term future for workplace testing due to end in July. Is there scope for this continuing? Thirdly, the isolation policy. What's the test and release scheme going to be if you get the dreaded ping off the NHS app on your phone? Fourth, how are the big enablers like schools and public transport system, how are these things going to operate? These are so crucial to confidence in the economy. And then finally, James, and this feels like it's a big one, how is the government going to monitor and judge the impact of the virus on our health system going forward? Firms will be really relieved, really welcome that we are moving to step 4, but they have an eye around what's going to happen in the winter, and that conversation needs to happen right now. So we're going to await, James, with eager anticipation for what the Prime Minister will have to say later this afternoon. I suspect it's something that we will revisit in future CBI at 10 webinars.
And John, can I just pick up on 2 things?
Yeah.
One is you mentioned the, and I think those 5 make complete sense. I think everyone really wants to know that 5th, just so they can begin to have some foresight. But on schools, I imagine you're getting quite a few businesses who are saying, look, this thing is really problematic for us on the business front. What's the message been to the CBI, from the CBI to government around this?
Hugely. I mean, it's both schools, but as I mentioned, James, within the workplace as well. So school bubbles being burst, individual working lines being burst in the office or the workplace. It's actually threatens to sort of undermine the recovery if you haven't got the staff to really put your foot down and trade your way to recovery. I think our message to government has been pretty simple. You've got to develop a test and release scheme. We have this amazing testing capacity. We have huge progress on the vaccine. Let's see if we can use both of those to really make sure that people only have to self-isolate when it's absolutely needed to. So the test and release scheme, we think, is the answer to that particular issue.
And the other question I was just going to ask was about travel, because, and not just in a holiday context, but also in a business travel context, and support for the aviation sector and the travel sector. It feels though in all the pre-briefing we've had over the weekend, that's rather felt left hanging. Do you have a sense of what kind of guidance is coming on that?
It's a really good question. Sorry, someone's just pinged up in my inbox there. It's a really good question. I'm going to try and avoid catching Louise's eye because she's always hot on making sure we don't ask the Treasury for too much money. But listen, what I think the government is going to do is they're going to give greater clarity on what the quarantining restrictions will be for people coming back from amber countries if you've been double vaccinated. So I think we're going to see a little bit more freedom when it comes to what those quarantine restrictions will be. I think at the same time, it's unlikely that we're going to have a complete reopening of international travel immediately. The firms have already lost an entire summer's worth of trading. So we do think that there's a bit of a case for a bit more targeted, possibly grant-based support to that aviation industry just to act as a bridge until, fingers crossed, we get back to normal. So that's where we are on that one, James.
All right, I'm just going to flag up because I think it's always useful to make sure we hear from as many people as possible joining the call. Peter Buchanan just asked a question about international travel, as I had, and just made the point that it's going to be pretty difficult to have a strong recovery until that part of the economy is back up and running.
Absolutely.
Let's talk about, if we can, where businesses are in terms of their cash flow. I'm aware that last week, Teresa, we were talking about the labour market, and actually Ray Newton-Smith, who's the chief economist of the CBI, was making the point that, you know, this time last year we had fears of 10+% unemployment. We're now at 5+%, and we're thinking we've got labour shortages in particular sectors. But what emerged in that conversation was just how very different parts of the economy are. And I just wondered, from your chair at UK Finance and advising on the SME Advisory Board, I'm just interested to know what you're seeing, what kind of businesses are really struggling now, and which ones are sort of preparing for a much better summer.
Okay, thank you, James, and good morning, everyone. So I am the independent chair of the SME Advisory Group. I also actually work as the independent chair of a group for HMRC's Admin Burdens Board. So I see at first hand from a large constituency what's happening out there. But lastly and importantly, I actually am in the hospitality sector. I run a cinema in Northwest London, which is half open. So that has its own challenges. So I know at first hand the devastating effect of this pandemic, and not just from a financial perspective, but from a skill shortage, well-being, lots of other perspectives. But my general view, James, is it's a very mixed picture across the economy and within sectors. There's been some clear winners from the crisis and others really struggling. Uh, we're not seeing a significant level of companies in distress or going into insolvencies, and insolvencies are well below normal levels. Many businesses that took out bibbles took them out to place on deposit just in case, and they still have that money. So they're clearly still taking a very cautious approach to what John's mentioned as the opening up of the economy. Business deposits are 20 to 30% higher than before the crisis. So there's lots of liquidity there. And many businesses are also moving back to business as usual lending. So it's a really interesting picture. But how much devastation lies beyond the cliff edge of government support stopping? How many redundancies are in the pipeline? How many zombie companies exist in the marketplace? Importantly, how many SMEs are still struggling? How many of those will survive? But what I can say, James, it's really important for businesses to start planning now for this. I mean, if you've got a Bibbles or a Sibbles and you want to take up any of the forbearance options that are out there, then get in touch with your banks now. Set out a plan for mapping out all the existing government schemes you've taken up or other forbearance measures from utilities, for example, together with a timeline of when these repayment requirements are coming up and any further options there may be out there, and there are, for forbearance. And if you think there's a possibility you might have a cash flow problem, now is the time to speak up and seek advice from your trade association like the CBI or accountants, banks. Um, some lenders have doubled the available support for advice. Investment, to ask, SMEs are inherently risky. They're a risky population. Debt isn't always the right thing for them. But if you think you need investment, now is the time to ask. Thanks, James.
Teresa, can I just ask you a question about that, about
Yeah.
your Bibbles and Sibbles, about your bounce-back loans and your coronavirus business interruption loans? When those loans were rolled out at the time, there were two different problems you heard from SMEs in particular. The first one was with the coronavirus business interruption loan scheme was, we're sitting on the phone for ages, the bank isn't giving them to us, we're going crazy and we're about to go bust. And then the bounce back loans was the opposite. It was like, we can't believe our luck here, we're just going to call it up and the money comes straight to us. So I'm interested to know whether what you're hearing from SMEs, what the response is when companies are coming to them now and saying, we've got the £50,000 we need to repay on the bounce back loans, or we've got this CBIL that we need to repay. Are you hearing from SMEs that the banks are banging the table for repayment? Is there a kind of culture of understanding about the restart? What are you hearing about the relationship between SMEs and the banking sector?
So at the moment, James, it's still quite recent that Bibbles have come up for repayment. I think banks have been just a little bit late. They've been later, for example, than HMRC, where HMRC have always messaged saying, talk to us, don't hide your head in the sand, speak to us now. Banks have just started to do that. And so I think it's early days, but I am very hopeful that banks have got that, the measure of SMEs now, that they will apply proportionate, very proportionate and understanding methods of getting repayments. And there are still some forbearance measures out there. The recovery loan scheme, which is kind of, I would have thought, I don't know if Louise and John would take a halfway house between a Bibbles and business as usual banking. So there's still stuff out there, James. And you know, if you're not getting listened to, drop UK Finance a line.
Teresa, thank you. Let me ask Mark Gill a bit about this, if you might. And Mark, before we get into the weeds, already there's a question or two that asking specific things, but just if you're running a small or medium-sized business and you're trying to, and you're scratching ahead, you're beginning to get anxious in the way in which Teresa says, what's available to you in terms of, support, understanding, time from HMRC?
Thanks, James. Well, firstly, just a pleasure to be here. So I lead debt management within HMRC. So the part of the organisation that contacts customers to pay and deals with the contact. Your question around, what should they do? Well, we've been really clear. In fact, Teresa just trailed it. That we want businesses and individuals to come forward to talk to us. It is always a better experience for businesses where they engage with us. The level of support that we've offered throughout, I'd be very surprised if your members haven't really seen a huge difference in the tone of our communications, the level of support that we've offered, the receptivity to forbearance, which has included, particularly as we navigated through the toughest parts of the pandemic, deferral periods on tax bills, and flexible supportive time to pay arrangements, payment plans, which are based on business's cash flow, not arbitrary, not set amounts, not a fixed limit. We've seen the length of those increase, but what's really held up is the level of successful completion. So we've set up about 500,000 time to pay arrangements over the course of the pandemic, and still 9 out of 10 are completing successfully.
So 500,000 what?
Time to pay arrangements,
Right.
Payment plans.
Sorry, go on. I just couldn't hear you, so I lost you there for a second. So
Right, sorry, James. Yeah. So I think what I was trying to demonstrate with the number is the scale. And if businesses get in touch with us, they'll speak to one of our advisors, one of our collectors, and they'll take them through their payment position. They will be flexible in offering support, and really keen to be really clear that you can expect that level of support if you engage with us.
And Mark, just explain. So the reason I interrupted was I just want to know what the process is, because I think lots of businesses sort of know that the support is there on paper. They're just worried what happens when you trigger it. So once you go into the time to pay for arrangement, what happens to you then, and what's the likely impact on the way you get treated by the bank, the impact on you, and if you like, the sort of perception of the business itself?
Well, in terms of the payment plan, James, I mean, not visible in terms of sort of credit files and so on. We'll engage with the business on their whole tax debt position. Interest will apply throughout, but we'll wrap the whole of the tax debt into a payment plan arrangement. We'll set that out in terms of including, if it needs to include, a short period of deferral at the start. We'll set that running, we'll monitor it, but we'll be really clear what's required, the length of it, the payments that are required. And if a business then, is able to pay more, to some of the liquidity points that Teresa was saying earlier, then they can do so. If they're struggling further down the line, the same applies. They should get back in touch with us, and we'll talk through the situation. We're absolutely trying to be as flexible as possible.
Mm-hmm. And Mark, can I just ask you about some of the processing within HMRC? I'll give you an example. One person has asked a question which is around R&D tax credits, and I'm just going to read it to you because I think it's kind of interesting specifics, but also in the broader issue about the pressures on the HMRC itself, which is, we're an SME developing AI technology, and 90% of our revenue is from exports. The annual R&D tax credit claim is critical for cash flow. Last year, it took longer than the target 28 days from submission. Does HMRC now have sufficient resources in place to meet this target now? I.e., the question really is, what are the current average time from submission to payment?
James, I wouldn't have the exact figures on the R&D tax credits, but what I would say more generally is, like any large organisation, of course, we've been working through some customer services challenges around, we've had 90% of the workforce work from home. we've had to we've supported at scale all of the government COVID support schemes, the furlough scheme, Cs and everything. So we've been prioritising to a certain extent, but we are absolutely working through all of the, including the one you mentioned on R&D credits, all of the heads of work to make sure that we're providing a good level of service and aiming to get all of those back within the acceptable parameters. Certainly recognise the importance of the repayments.
Well, thank you. I hope that answers the question, or at least the direction of travel. Can I ask one tension, which is sort of obvious from the outside, but I don't know how it works inside, which is on the one hand, you've got small, medium-sized businesses who are genuinely trying to figure out what to do around their tax debt. And then you have this, the Chancellor himself has pointed out the need to recover any fraud associated with the Bounceback loans and the scale of abuse of that scheme. How does that work? How does, on the one hand, the HMRC go after abuse of the scheme and at the same time prove to be understanding and sympathetic to those people who are struggling with tax debt?
Sure. Well, first and foremost, we're taking a very understanding approach to circumstances. So at one end of the scale, yes, there is fraud. It's been discussed, as you say, in the media and so on at one end of the scale. What we find is there's also a lot of businesses have had a tough time administratively, and where we come across perhaps furlough overpayments, issues in some of the other schemes, we're engaging with businesses to recover that money for them to pay it back. One such example, if I can give you an example, is businesses who've been claiming CGRS but haven't been able to pay the PAYE and NICs as a result of the claim. And as we are with any tax debt, we're taking a very supportive approach to make sure that they understand the issue, that they're able to pay it back through time to pay if required. But at the other end of the scale, where they haven't paid for a very long time, and for a small number of businesses at the for the whole period of the furlough scheme, well, we're taking action on those cases to inhibit the claims only until the business is able to pay.
Mark, thank you. I'm going to be a bunch of other questions, I know, but I wanted to bring in Louise, Helen, because Louise, can you stand back for us and just give a sense of what you think are the issues happening within the economy, as in the real economy, who's struggling here on the cash flow side, and what the pressures are on government, given the amount of expenditure that's gone out of the Treasury and the need to begin to recoup that from business?
Yeah, sure. Thanks, James, and good morning. It's great with the rest of the panel to be here with you this morning. And especially as we continue to hear the positive words from the government on hopefully getting the green light to lift the majority of restrictions on the 19th of July. And that will obviously make a big difference to a lot of businesses. As we've seen throughout the pandemic, the fortunes of businesses have really been tied to the path of the virus and the level of restrictions, which, as you say, have hit sectors across the economy very differently. And what this has resulted in really is a kind of two-speed economy across the private sector, and we've seen that in some of the recent survey data we've done for the CBI monthly growth indicators. So that saw manufacturing and distribution activity grow at record rates, and growth in business and professional services remain strong, but consumer service activities continue to fall, and that is obviously where we are seeing a lot of firms still struggling. And again, as we mentioned at the front, kind of international travel very different to the domestic economy at the moment. It's disappointing that we haven't yet seen a greater opening on that. Hopefully that will be coming down the line, but remains incredibly tough for those businesses. So I think that the coming months really is a kind of turning point where hopefully we will see the safe lifting of restrictions, which the CBI has been calling for. But there will be a lot of businesses that are still struggling, and particularly those in the consumer-facing sectors, which are just starting from a much weaker position as they move into the recovery as well. As we talked about, there is this kind of tension and some real challenges that the Chancellor will need to balance across the autumn. So really wants to move towards a position of more fiscal sustainability. But I think the really important here is that they don't choke off that recovery, and where we are seeing businesses that will need to proceed at different rates to make sure that there is that support still available for them, and that rug isn't pulled out from under their feet too quickly.
And Louise, are there cliff edges that we don't see? Do you remember last year you could see these cliff edges, for example, particularly around the job retention scheme? I'm wondering whether there are kind of dates that you're going to begin to see repayment expectations on some of those loans, tax dates, etc. Are there cliff edges that we should be looking out for?
Yeah, so as you said, the government has provided an unprecedented amount of support over the pandemic, but that support is starting to be phased out. So while substantial support remains, businesses do really need to plan and be aware of some of these cliff edges that are coming up, particularly making sure that as the economy unlocks, that businesses are managing debt, repayments and their tax deferrals as well. And it was really welcome, and as we've heard from kind of Mark this morning, to hear the announcement on managed arrangements for tax liabilities as well. So as the government's financial support has kind of continued to be reviewed over the lockdown, we've seen quite a lot has been tied to the previous roadmap. So we had quite a lot of cliff edges that came last week, actually, with the previous date for the 21st of June as the expectation for the lockdown. So some of those have been shifted, but some of them are still in place, actually. So we had the expectation for the end of the moratorium on commercial rents. So this was something that the CBI has pushed for an extension on, and it's great that that has been extended until March 2022 or until the legislation comes in. So that's still kind of one to watch on the date there. We saw the end to the trade credit guarantee scheme as well. So unfortunately, that did still remain in place, and we continue to work with insurers and brokers to smooth the transition towards a normalised insurance market in that area. As you say, furlough is obviously a big area as well, and we saw that increase in the repayments and the kind of tapering off of that support. So furlough does continue to still be available until September, but we do think it's kind of right to gradually wind down the scheme. And then the other cliff edge that we saw was around business rates relief as well for key sectors in hospitality, leisure and retail, and it was disappointing that we didn't see the extension in that. And we're particularly pushing for guidance to be issued. There's a 1.5 billion business rates relief fund, which the government announced in the March budget, that we're still waiting for the guidance to come out on that. So we're expecting that in the coming weeks, but that is a really key thing. Where the support is available, it's really key to make sure that it is actually businesses can access that and it's getting to where it needs to be quickly. As we talked about as well before, for some businesses, the repayments on loans that have been taken out over COVID are starting to come in now, and we're seeing deferred tax repayments also due. So those are definitely things to watch, and we potentially see another kind of cliff edge looming towards the end of September, where we'll see again the end of furlough and also VAT rises for hospitality and retail, moving from the 5% to the 12.5 as well. So support really does still remain available. And until the end of the year, again, as been mentioned, businesses of any size can access loans and other forms of finance through the recovery loan scheme. And for those that access the Bounceback loan scheme before, Pay As You Grow offers the support to manage those repayments, including the capital and interest rate holidays. So while the prospects for the economy are looking much more positive, and we have seen this improved optimism, it's important for businesses to really consider their exposures in the round and start those valuable discussions that we talked about with lenders, insurers and landlords as early as possible to really plan ahead and make sure that they don't get caught out by any of these upcoming cliff edges.
Theresa, can I just ask you, just listening to Louise, you're quite struck by how much support is beginning to taper away, and also, people are going to be thinking to themselves, well, now I'm going to have to figure out what I do about employment. I am going to have to figure out what I do about insurance costs, debt costs, tax costs. Do you think we're missing something here? Do you think that in the optimism around July the 19th and reopening, there are going to be quite a large number of business failures, and in the kind of overall macro picture of much stronger growth, we're going to miss a kind of strand of micro closures that are going to be a real problem for certain places and certain sectors in the economy? Do you have any sense of that?
I think that, as I said in the introduction, I mean, insolvencies are well below normal levels, and clearly, Louise's and Mark have really said why that is the case, because it is because of government support, and I think we will see redundancies when the furlough scheme starts to unravel. redundancies that perhaps have been masked by furlough. You know, that we've got furlough and we've got a large level of hospitality jobs that can't be filled, and that's odd. But I'm still, James, in the camp of critical but not disastrous.
Right.
The rent arrears is an interesting one, because I don't think we've talked about that enough, and I think that is a real cliff edge that the legislation that's about to be introduced requiring mediation between landlord and tenant will help. But again, you've got to look at your cash flow now. There will be businesses, James, that will be able to demonstrate that, but for their debt, they are really good businesses, and there are insolvency there are insolvency schemes on the landscape, like prepackaged administrations, all sort of things, high hurdles, but good stuff that can be brought to bear to save the businesses and make sure they come out the other end stronger and more resilient.
And is there any other evidence, Teresa, of the opposite, of the sort of your good old Schumpeter creative destruction, that actually that what some people hoped they'd see in the emergence from the pandemic, or a return to something like living with COVID, that you'd see a vast increase in the creation of new companies, that there would be a sort of increase in entrepreneurship to fill the gaps and address the changes in the way in which we live and work? Are you seeing any evidence of that yet?
James, I think for the first time ever in the last quarter, there were more than 200,000 businesses. The first time ever, more than 200,000 businesses were created. So there are a lot of businesses out there that are going for it, that want to get out there and start up, and it's fantastic to see. So what we can't imagine would be another trigger event. And I think John's point about living with the virus is absolutely critical, and controlling inflation, which I think is another problem that we will be faced with.
And sorry, Teresa, I don't know the numbers well enough. When you say that first quarter, 200,000, you mean that's the highest level of business startups in a quarter?
In any quarter, yeah.
Interesting. All right,
it's amazing, and that's been continuous throughout the. I mean, it's been a bit slower, but you know, the level of startups is beautiful. I mean, it's great, it's wondrous, James.
Amazing, isn't it? I mean, it's really lovely to hear that, because I think that there's a tendency, maybe this is just the kind of skepticism that I wrongly bring to it, is you think, oh, this thing is going to be so problematic that we're going to all be people in emergency measures, and there clearly are those, but there's clearly a culture at the moment which says things are changing, there's a moment here, there's an opportunity here.
Yeah, absolutely.
Can I just get a sense, Mark, from you? I just want to do something which I know is sort of not theoretical but intensely practical. I think for a lot of small and medium-sized businesses, actually the HMRC is quite a, let's put it this way, quite an intimidating institution, and how you approach it, which door you knock on, how you actually go about getting that advice, and that you don't feel overwhelmed by just kind of dealing with a website. What's the best way, if you are trying to do what Teresa said at the start, kind of plan for the next 6 months and possibly 18 months? How do you go about that?
Well, thanks, James. I mean, I can see the historic reputation, the VAT man and all that sort of, whatever you want to call it. There is that, of course, but actually, I'm incredibly proud of the empathy that the team have built up through this pandemic. I mean, at some point, almost all of us have been on the phone supporting customers through CGRS and Cs and Eat Out to Help Out and all of the schemes that are available. Yes, inevitably you'll find our number on the website. We've republished all of our sort of get in touch type guidance, and only as recently as a few days ago, we just published a piece on our approach to how we'll handle customers, and there was some media last week about us taking a cautious approach back into enforcement and insolvency. So, a couple of points, a lot of empathy among our colleagues in HMRC, the workforce, who have lived through this as well. Friends and family, and have supported, incredibly distressing calls, even supporting businesses at their hour of need. We'll harness all of that empathy in how we return our business as usual job. The numbers on the website, of course, the guidance is available, but when businesses, individuals speak to us, they can expect an empathetic, supportive approach, and we'll listen.
And Mark, can I ask you just a geography question? One of the big debates going into the pandemic was the spread of business across the UK. When you're seeing insolvencies or tax debt problems, is there a map to it, or does it pretty much follow the business map as usual?
We'd be looking at that, James. Not really. So the level of impact typically tracks the sort of centres of economic activity. That's what we're seeing in broad trends. We are seeing, across trade sector, we are seeing the obvious trends. I'm really proud of the work we've done to segment customers. So we haven't just taken a blanket approach to contact. We've actually looked at our data, and this isn't black box. This is just what we're seeing from PAYE, RTI returns, VAT returns, who has and hasn't accessed the HMRC supported schemes, and we can see where the impact is. And we're taking a very supportive approach, pausing contact at times with businesses most impacted. The tone of our letter and communications has been tuned to reflect, what we expect to see. It's not binary, because we'll always talk to the customer when they come forward, understand what their situation is. We've got a little bit of a starter for 10 through the data.
And just on that, Mark, what about sectors? I appreciate that if it's not clear in terms of geography, you'd have thought instinctively that there must be more pressure on some retail businesses. You've heard anecdotally question about businesses that have been owned by women or female employment in the labour market. Do you see any of that in the data?
We are not obviously, James. Couple of standout things. So yes, we are seeing as I say, the obvious trends: retail, hospitality, aviation support, that kind of thing, come through in the debts. But actually, there's been some quite surprising data, which is take the deferred VAT last year, £34 billion. We're down to around £2 billion. That isn't, quote unquote, under control. So about 2/3 of that has been paid in full, and about 1/3 is in the new payment scheme that we delivered. So the scheduled instalments. That's surprising, given the amount involved. And as I say, we'll take a flexible approach to those that still need to come forward. But also the big companies, actually working really, really hard to get their, administration under control, time to pay if they need it. And very, very few that haven't come forward. So being surprised in a positive way, as well as perhaps not being surprised on some of the trends that we're seeing.
Mark, thank you. Louise, can I just ask you one thing, just pick up on the point you made about, the Chancellor's wish to return to fiscal sustainability. In a normal year, the beginning of the summer is the time when the Treasury starts to think about its planning, and the process begins again. And I'm a bit lost actually on what the process is now, as they start to sort of unwind emergency measures and think about more, if you like, normal tax planning and reform. So can you just tell us a little bit where you hear the Treasury is in that context?
Yeah, sure. So we expect, as you say, that there will be a lot of work going on over the summer, but we might see a bit more of a shift towards the kind of business as usual. So we're expecting in the autumn that there will be a comprehensive spending review, and the hope this time is that it is more than 1 year, that they will go for look at the 3 years and be able to provide that longer term perspective, and potentially alongside that the budget as well. And I think, like I say, this is where we will see the government that at the moment, they've had a lot of their priorities on the immediate term in terms of Brexit and then kind of COVID. We saw with the Queen's speech earlier in the year, really trying to set out that longer term vision and think about, what is it that they still want to deliver within the manifesto. And we had a lot of emphasis there, particularly on the levelling up side. I'm sure that they'll be very conscious as well that we've got COP26 coming at the end of the year. There wasn't so much in the Queen's speech on kind of decarbonisation and the green side, so we might expect some more on that in the end of the year. And I think, again, the kind of key message for us is thinking about you know, how can we actually make sure that businesses move into that longer term growth perspective from the pandemic, that we don't want to see a return to austerity as before. We don't want to see things even kind of returning how they were before COVID, and where we've had longer term issues with business investment not being as strong as in other countries, and actually thinking about what are the step changes that the government can take, and to really, as we released a report earlier in the year, kind of seize the moment of like, how can they do things differently? How can we really make sure that the UK is the best place to kind of invest and to grow business? And we're looking to see a lot of that come through in the budget, and I think that we really need to see the priority, particularly for business investment. And one of our key priorities around there is seeing the longer term reform for business rates as well, which is much overdue and will provide a lot of support for businesses and to the high street.
Yeah, I know that business rates, it's one of those things, and I think business rates were driving people crazy beforehand, but it's now become something altogether different. John, can I ask you to have just the last word? Because listening to all of this, it all feeds into that whole CBI project around how the UK rethinks the next phase of the economy, you know, regional competitiveness, innovation, skills, etc. Can you just give a sense of, as things begin to reopen, how the CBI itself is thinking about kind of feeding into that longer term thinking? The government's now, I guess, got a little bit of room to do.
Yeah, of course, James. So I think first and foremost, we're not going to stop supporting members on the COVID piece. So we've mentioned it a couple of times. How do we learn to live with the virus? That's from the government, but also from a business perspective. That's really important for sort of economic confidence. I think secondly, for that kind of broader strategic, how do we seize the moment? Well, actually, we think there's a real case for where the CBI can almost fill in the blanks, provide the extra business detail for the ambitions that the government have set out. Plan for growth is great, ticks all the right boxes, but it's pretty high level. So actually there's a real case for how can we provide the business-led actions to turn the government's 10-point plans into 10-point plans for business. And I think Louise mentioned it earlier. The key has to be, how do we unlock private sector investment? And to do that, you need certainty and you need confidence. And we think, you know, kind of detailed business-led plan in some of those areas around decarb, around innovation, around levelling up. That's what we can bring to the table, and that's what we're going to be working on in the coming months ahead.
Okay, well, John, thank you. We will stick close, and I guess we'll pick up next on the back of the Prime Minister's announcements today, and then the more formal announcements next Monday. Just to let everyone know, there is on the CBI website a whole section on how to deal with cash flow. Do go to the cbi.org. It's called the Cashflow Crunch. It's a very helpful thing. Just a big thank you to Dame Teresa Graham, to Mark Gill from the HMRC, to you, Louise Hellam, and to you, of course, John Foster. It is a really interesting, and I should say, Teresa, quite encouraging conversation, not least because you hear the HMRC, Mark, from you in a kind of personal way, talking about how to try and empathise with people going through the pressures they inevitably are going through. But Teresa also to talk about, you know, business creation and enterprise creation. It's a healthy reminder at the start of what we hope will be a sunny week. Have a good day and a good week, everyone. Thanks for joining us. See you next time.